Hello, everyone. Welcome to Market Trends with David Russell. I am the global head of market strategy at TradeStation Group. Today is Thursday, March 21st. We do these webinars every Thursday afternoon. It's great to be with everyone. We want to share some disclosures before we get started. We have a pretty kind of interesting continuation in this market here with just the buying continuing as new aspects of the AI narrative widen, and also there's a lot of other things moving in terms of the kind of cyclical trade as people look for the economy to remain in healthy shape and for the Fed to not yank the rug from anyone yet. All right, so I want to show you if you want to follow along with what we're doing. If you go to tradestation.com and then you click up here on Insights, this brings you to a blog that we have. Actually, let me quickly share some. I want to just share some disclosure with you guys in the chat. And so if you click here, this is the rundown for today, and we can follow along with a lot of things I'm looking at. More things have popped up since I created it. Also want to remind folks, next week we're not doing market trends next week. Also remember next week, Good Friday. So the market is it's a 4-day week next week. So I was looking at overall at the S&P here. What was kind of interesting to me was a series of different things to look at. In fact, before I even do that, let's look at some of the things here we have on our workspace. I'm going to start off by showing everyone the standardized returns of some of the key ETFs we're going to talk about. For some reason, I have something is popping up on the screen and I'm not sure why. How do I make that go away? All right, I think that's better. All right, I apologize for that. Um, so you can see some of the standardized returns I'm going to show you guys here. What I'm going to do now is I'm going to go over here to our some of the workspaces we use here. This is the MT main workspace. I'm going to data and I'm going to add the NASDAQ 100 so we can start looking for some of the sort of patterns that have been interesting recently. I'm going to add also of the NASDAQ 100 here and also adding to my MA tools. So those are going to populate as we go. I think I'll also add the NASDAQ to earnings dates because earnings are now starting to come up and it's time to start thinking, not exactly yet, but, earnings season is now kind of getting on our radar. And especially by the time we come back after Easter, it's going to be in a much more sort of a near-term place. All right, so if you want to use the workspace we share with you guys, you go here to the zip file where it says downloads available here. Inside that zip file, there's a series of ELDs, and then there's also the actual workspaces. If you're using the TradeStation platform, you want to run the ELDs first. That way, you're going to import the indicators that are used because some of these indicators are custom indicators that you need to have for the workspaces to work. So what was interesting to me, if we look here at the S&P, let me just quickly jump back over. This is one of the charts that we use to look at the S&P on the futures basis. But what was very interesting to me was that we had a series here. This is the hourly of the cash index, and this was an outside week 2 weeks ago, and then we had an inside week. You can't see it on the hourly chart, but if you looked we can make this a weekly chart, you would see. And we basically had an outside week and an inside week. So it really squeezed down. But something very interesting happened the day before the Fed, and that was we held the midpoint of last week's inside week. We tried to open down and then the continuation. And what was very interesting was that, Monday in many ways had all those kinds of looks of a kind of stupid market order Monday when people pile in and get kind of beaten down. And then we tried to have the follow through on Tuesday morning, and it didn't work. It was just the opposite. We basically saw buyers come out of the woodwork and drive and just remain strong through the Fed. So I think this is very interesting because these were potential reversal patterns for that outside week, and just nobody cares. It does not have that ability yet to follow through, and I think that's one of the most important things that we kind of continue to see here. And then let's take a look now at some of the key points I want to make. Just the advanced decline line here just continues to make new highs. Another thing that's interesting to me is that I have this chart here in real time. If we look at this chart, what we basically see is the advanced decline line, actually a really significant uptick in the last 2 days. But what's interesting to me are these other two kind of like the pulses, kind of the internals of the market. Some of the key things to look at was the 9-day rate of change just remains positive, and I've noticed it very often. This is the 9-day rate of change. This has to kind of go negative for a while for the market to really develop a kind of significant or any kind of sustained pullback. You're normally going to see this kind of go negative. Look back here over the summer, the 9-day rate of change was really kind of negative, and it kind of just once it got negative, the market had this pullback, in the third quarter. And what's interesting is we don't see anything like that. We had a little bit right around kind of Christmas to New Year's. We had this kind of, New Year's Eve or New Year's week kind of pullback from a record high. And that was a time when we had been running really sharply. And then there was just no kind of continuation of it at all. And here we started to try and go negative and just couldn't do it. The Wilder's RSI just remains above the 50 midline on this oscillator, keeps hitting overbought and then kind of inching back, does not go to oversold at all. So this is also a very interesting thing. We look at our MT breadth workspace. This is one of my favorites that I've created for you guys. Wow, look at this. This is 110 members here of the S&P 500 are hitting new 52-week highs. And what's interesting here, if I hold over this, so this is the SPY chart. Now, if I click on this, you can see that today, on this day back on March 4th, we had 106 companies, and now we have 110 members of the S&P 500. So if we look back at history, we can see that we have not had this many 52-week highs, this green line here, really going back. I'm pretty sure it's since May of 2021. I hadn't looked at this until today, just now. I remember, yeah, see, we had this big right there. So basically, right now, these are just very positive breadth indications right now on the market. And what is also interesting to me, there's all this excitement about semiconductors and everything like that. And we're going to get to some of the interesting stories on that. But if we look at MT Main and we get our key ETFs, what do we actually see in the last week? Industrials are leading, consumer discretionaries, which have some tech names like, kind of Tesla and Amazon, which are, but financials. And then it's also interesting just to see here that the safe havens, real estate, healthcare are just kind of lagging here. And I would almost say that to a certain extent, XLK is now kind of blemished by Apple. It just kind of, Apple has become this kind of, you know, beached whale at this point in time. And that's kind of weighing on the XLK. But I think it's important to realize here is that this is a kind of risk on kind of mix of sentiment right here. We also do see that the cyclical things like semiconductors are outperforming. So all of this kind of shows us metals outperforming. We've been talking about materials for several weeks. We are some interesting patterns in some of the steel makers today. I wish these guys traded more options, but it is interesting to kind of see that there is a sense here that we are looking at a strong cyclical economy. And I think it's important to realize that because we really haven't seen a cyclically led economic expansion in a while. And things like industrial stocks, financials, materials, those kinds of stocks can outperform. They can work. And the thing is that when you have that kind of cyclical economic environment, it's going to drag up earnings across the entire market, or at least there's a good chance of that. And when you look at Micron results, it seems like it is happening. So I think this is something that's important to realize. We look across the market here. There were signs of weakness, and then the real signal to me was that Tuesday, the turnaround Tuesday, where basically we had morning weakness that could not hold, and basically the bears were on the run. And I like history, so I always like battles of things like Battle of Stalingrad. To me, it's kind of like this was the Battle of Stalingrad for the Bears. They tried, they could only go so far, and then they got driven back. And I think that's really what happened here. The Bears tried to follow through on what could have been a reversal on not exactly a reversal, but it was a bearish sort of candle on Monday where we closed near the lows after some initial weakness, and the Bears just couldn't do it. And then we actually had, if you look on the daily chart, let me just go back to my ES chart, make this a quick daily. And what you can see here is that this actually turned into a bullish outside day. So it went from tried to be bad to, taking out the high of the previous day. So This is the sort of thing that when you see signals like this, it tells you what we've kind of known for a while, which is that there's simply not a lot of sellers in this market. There's a lot of cash on the sideline, and that's really what we're seeing here. All right, so I just wanted to start off by kind of looking at some of the things that kind of popped up to me right off the bat. If I go to MT Main here, um, there were two in particular that kind of jumped out to me as potential things that people might want to be interested in doing things with right now. Something like Best Buy was actually kind of interesting to me because this company had strong earnings, and you can see here they just had this kind of cross this the what do you call it? The golden cross. So if you look at Best Buy here, this company, as we can see here on the platform, Best Buy reports earnings on the 23rd of May. So a person kind of looking out for kind of continuation. What was interesting to me here, look on Best Buy. If I look here in this May expiration here on Option Station Pro, it was I was going for this the main monthlies on this. Um, And so for me, what's interesting about something like this is it doesn't have to be exactly toward earnings. It's just the fact that a name like this now has kind of based, and we see consumer discretionaries doing well, and a lot of kind of traditional retailers have done well. We've talked about things like Williams Sonoma and Dick's, which had these incredible moves. And I think it's important to realize we really were beating the drum recently about margins. And the thing is, wow, look at Dick's. It's incredible. Anyway, a name like Best Buy here, also people are going to start to look at this and potentially, a margin narrative in this. So, a company like this, I was looking for something, a potential move up. It's, excuse me, it's kind of ranged since the beginning of last year. And what you really see here is a person could potentially look at the May. I was looking at the 82 half to 87 half. So if I go here and I click on 82 half on the ask, hold down control and click on 87 half, she's about $1.60 for a $5 spread. So that's something that's kind of interesting, kind of potentially to me. So I look at a company that really has not done anything for a long time. And it's just kind of sitting here. You have the golden cross. You can also see a trend line that's been coming down. So that's Best Buy. Another one is IBM. Now IBM started to pull the AI rabbit out of its hat last earnings season. And you have this 21-day exponential moving average coming up. Now, what's interesting in this is, I think for this one, I was looking at April. That earnings season is the earnings report is on the 17th. You can look right here. We have the next earnings date right here on the chart, and it shows the 17th of April. So, a person for this one might be looking at something like the April 19th expiration because that is right after earnings. And what's interesting is even if this stock, I mean, look at 200 is really not far away on a name like this. And it was kind of interesting to me that, the 195, 200 vertical, this is a pretty conservative move, to be thinking about in a company like this that has had some interesting momentum. This is about $1.62 with a fair bit of time. A person could be potentially, you know, looking for a sharper move. They could click on the 200 on the ask, hold down the 205 um, on the bid, and now we're looking at wait a second, the 200 205. That is now a 93-cent spread, 93 cents for a $5 spread with a move up to 205, and you're looking at a stock that is now, oops, you're looking at a stock now that is at like 192. So, you're looking at a move about $12 on a $190 stock. So it's a move in less than 10% for potential, 400% sort of move on the vertical. So I mean, this is sort of some of the things now that are popping up. And how am I doing this? But essentially, what I'm doing is I am looking here, and one of the key things that I am adamant about is to look at your average options volume. When you're looking at things for potential opportunities in the options market, we want to be looking at things that trade a lot of volume. So one of the ways we can do that here is we look on our price grid. This is included average options volume is a custom study that we created for you guys here on the Market Trends webinar. And what it does is it basically allows you to highlight. I set a threshold of 10,000 contracts a day, and it will put it in this kind of teal color. And basically, by doing that, what it allows me to do is I can be sorting stocks on different things. I can look at, what are the, companies that are up the most in the last 10 days or something. You can see here's some company, I think it's CoStar. I don't even know what this. I mean, it's some random company, but it doesn't trade a lot of options. But then you can see right there, you have PayPal and Micron and stuff like that. So it clearly highlights the names that are active. So one of the things I like to do with this is I'm going to click on that, and I'm going to basically say if it doesn't trade 10,000 a day, let's basically block it. So we're going to click. We're going to right click, go to data, and then go to add label row. I'm going to hide myself here. So you can see I went here and I added label row. I basically right click on a cell and then I go to data, add label row, as you can see. Now I can look at some of these things and what can I see? I can basically now look for companies that might have, for example, are near the bottom of their Keltner channels. We've shown you this Keltner pullback tool. Now Dollar Tree is a bearish one. But you can see here that here's our it's under its Keltner channel. You can say, I want to see things that are basically, right kind of at the, at the bottom of the Keltner channel. So you want to look at a positive value and wow, what comes right up on our list? AMD. Now, isn't that interesting? Down at that Keltner channel. And this is one to me that I actually was kind of looking at. And, this company has, pulled back really hard. And then to me, this is exactly the sort of thing that we want to be potentially looking at something like the the Keltner pullback. This is what it's designed for. This also is in its 50-day moving average. So if we look on our MA tools tab and we now sort for, we look at the most active things, we're going to see right off the bat, AMD is touching its rising 50-day moving average, as you can see right here. So that's kind of interesting. This is one now that's just kind of popping up on my list. Something like AMD. This one popped up to me this morning when I was looking for things, and here it is. Interesting to see it right here popping up on the list. So you can now kind of troll down. Now, another way you can use this is you can say, I only want to see stocks that have a short-term bullish pattern with the moving averages. So this will show you stocks where the 20-day moving average is above the 50-day moving average. So what we're going to do now is we're going to right click again, go to data, add label row, and now we've basically excluded stocks that have the 20-day under the 50-day. Now we can do the Keltner pullback again. And what it's going to show us is, again, it's going to show us AMD, Marvell. So these are also interesting names, semiconductor names that have pulled back really sharply. And here they're down at the bottom of the channel. Last night when I was preparing for the webinar, Supermicro also appeared down here. It's coming up the Keltner channel a little bit, but here is new AI name. This is an example of something that basically was working, and a potential opportunity appeared because of the Keltner pullback custom indicator that we have for you guys. This is in the zip file that we share. We're also going to be showing you guys a new custom indicator that we created that is going to be, it's down at the bottom of our rundown today. If you actually want to look, it's called bar since X percent move. Basically, if you want to see how long since the S&P has pulled back 5% or something, this indicator will let you do that. So anyway, I think it's just kind of interesting as I look here to see something like AMD kind of pulling back. Now, a bunch of other names that might be kind of interesting that were popping up as well for me. We were talking last week about Goldman, the insanely tight squeeze on the Bollinger. Now we did the Bollinger custom study last week. If you want to see that, go up to the top of today's rundown, click on this little thing that says market trends, and this will bring back all of our previous rundowns. And then if you roll down, you look at this one last week, energy metals jump, right? And then basically go down, and at the bottom we basically have the Bollinger Bandwidth range. Now, this was actually added in this Bollinger Bandwidth range indicator that we're not going to use today is in the zip file that is at the top up here. Downloads available here. It's the March zip file. Anyway, Goldman had this incredibly tight range, and here it is breaking out today. Now, I think this is very interesting. Goldman, Morgan Stanley, I think both of them are on the Reddit IPO. Now, Reddit with its IPO today, I'm not even getting to the present news today because I'm just so focused always on charts and looking for things that might be interesting as we talk about the news. But to me, Goldman here, very interesting. This was an incredibly tight range on the. These are Keltner channels, but if we added Bollinger Bandwidth, you would see that Goldman had been incredibly tight, and here it is breaking out. This is a very interesting sort of thing, I think, here, because if you look, this is a weekly level that really goes back, seeing Goldman come to life. So at this point now, Goldman is a name that people might want to be starting to think about some options opportunities on it. At this point, it's a little bit extended to me, so I'm not sure I see any clear opportunities, but this could be something where, looking for upside, the first red day, just looking for upside, an upside spread, for example. Or, I just haven't looked at this one yet to figure out options trades. I just know here that it's a little bit extended. This is also something where people might want to be thinking about something like selling a credit spread on the puts. So this could be something when something makes a sharp move like this. One of my principles for options trading is that basically, if you're gonna pay premium and you're gonna pay money for, you know, a debit, you have to be careful of anything that has limited short-term potential to move in your favor. Because the thing is that thing might just sit for a week and you can just basically have that time decay kill you, and then it turns around and basically rallies, 2 weeks later, and you don't make any money because your time decay, ate up all your premium. So the thing is, with a name like this, one approach can be wait for that first red day and then consider, a debit spread that basically would target an upside move. And in something like this, what's interesting is we do basically have the old all-time high on Goldman here up around 420. So this could be something where the stock has a red day, and then you look out about 2 weeks to the 415, 420 vertical. Something like that might be the kind of approach people might want to take. However, I still think that when you see this sort of thing, it's tricky because it could just chop here for several days, and a short term vertical could be weak. So waiting for some weakness is something that might make some sense. Another approach is to think about selling a debit spread. So let's actually look. About 7 days is really going to be a time when you're going to have that interesting sort of time decay working in your favor. And for example, here a person could, let's see, on the bid, they click on the bid and hold down control, and then, sorry, the 410s, the stock's at 413. We go to the 410, 405. It's kind of interesting here. A person here, you can click on the bid. I'm holding, sorry, and hold down. So this is basically a spread that's $5 wide, and it's going to bring in $1.57. So it's basically a 3-to-1 risk reward. And so the thing is, if you got assigned shares at 410, your cost base would be more like 408 and a half. And that basically would put you right around here, which would also be a modest pullback. So that's the sort of thing where a person could look for using the credit spread. And the thing is, say it just keeps running, then basically you keep that $1.57 as profit. So when something is starting to jump like this, selling credit spreads underneath it is an approach that has, less upfront risk. If it really tanks, something terrible happens, you have the downside puts as protection, but at the same time, it gives you that opportunity to be lurking underneath the stock as it moves higher. And if it does pull back, you can then get filled, and then you can do something like turn around as it rallies and then look to be selling calls into the rally and using the options that way to play either side of it. So to me, this is very interesting here. I think what's starting to happen in Goldman Sachs is something that this could be a cycle that could last. We could have, this could be the beginning of a short term to intermediate term move in Goldman that could give opportunities on the long side for months into the future. Look at what happened to Citi when it started moving. I mean, this thing had been dead, and it basically went from November basically through January. So the thing is, now look right here. One of these, I'm going to zoom in really quickly here. And Goldman, I'm sorry, this is Citi, but look, it came to that 8-day exponential. That's another thing. It tags the 8-day exponential, continues. That might see this sort of rally it had. It was this big, sharp rally, and then see this boom. It kind of looks like what Goldman's doing now. See, up it goes, and then sideways for what, 8, 10 days. and then continuation. So waiting for a touch of the 8-day exponential moving average on Goldman, if a person wants to be paying for credit, paying a debit spread, that can make sense. Or a person, if you had been selling credit spreads here on Citi, you would have just collected premium and probably never would have gotten assigned shares at all, and those trades would have been profitable as well. So we've seen moves like this before. And one of the things I'll say is that when a stock makes that sharp rally after not moving the way Goldman has not been moving, there are not entrenched longs, and usually the pullbacks are very insignificant. You just don't always get immediate follow through, which means that paying money for credit for a debit spread is not always going to necessarily have the greatest risk reward. Can you please resend? Wait, the download link is not working. An error message. Which download link is not working, sir? If you can please put that in the chat, I will check that. I apologize. Whichever link that is. Which are the links though? You're responding with the same 404. We have ones for different things for Trade Station, different disclosures and stuff. Anyway, I will now move on. But Morgan Stanley also. Remember the all right, the Reddit thing puts attention back on the idea of IPOs and tech and stuff like that. Goldman is the way right now that people are jumping on it. And I just think it's important to realize that, like we have said many times, and now I mean this is becoming more commonplace, this market is resembling the 1990s, 1995 in a lot of ways. I mean, even if you look at what we've been talking about with the RSI on the S&P 500, the S&P has not traded like this since 1995. We're not going to get into it now, but if you actually look on TradingView about 2 to 3 weeks ago, we had an idea where we basically showed. Actually, I'll use this chart, my MT blog chart here. This is one I have not shared with you guys because I keep changing it. But basically, one of the things we point out was when RSI just kind of cooks in here between 50 and 75, never goes under 50, never gets oversold, just hits overbought, pulls back, keeps just touching overbought. This pattern, I don't think we've seen RSI remain this tightly close to overbought since 1995, but this looks like 1995. This period of time as well with the 9-day rate of change, that looks like 1995. We don't have the advanced decline line going back that far, so I'm not sure about that. However, if we do look here at the 21-day exponential moving average, same thing. We held that 21-day exponential back at that time for a long time. So anyway, I want to just tell you, so that's the technical side. But then we obviously have the news side of it. We have the AI thing. And now with the IPO, the tech IPO, let's take a look at Reddit. It's just starting to trade now. I mean, I don't look at these things when they first come out. I don't have the the here we go. I mean, from my perspective, I mean, I don't like IPOs. And the main reason I don't like IPOs is because we don't have any levels on the chart. I like to look back and see levels. We don't have any daily levels here. So anyway, but this is now active. The key thing from my perspective though is that Reddit basically is another reflection at this point in time that there's just a very that this market has really in a true sort of bull status right now. And so I think that's the key takeaway from it. And it also means that things like Goldman, if we start to get that attention on things like IPOs and Wall Street and stuff like that, these big Wall Street security firms like Goldman and Morgan Stanley have been dead in the water for a long time. And this could be something that kind of revives interest in them. It's also interesting here if you look at I did a trading view idea recently on Jeffries, but this was interesting because we basically did a trading view idea recently on this breakout in Jeffries, and it has been working. Someone just kind of mentioned that. This is kind of like a smaller sort of name. Um, for some reason, its chart is cleaner than Goldman's. I'm not sure why, but it had this pattern we wrote about at the time. The way it just kind of snuck up to that old 52-week high, got above that 8-day exponential. It stayed above the 8-day exponential, got above the old high, and it stayed there. And then again, where's it going to go? No one wanted to sell it, and it just at this point in time is what we're seeing across the market. There are just no sellers, and things just are breaking out on a lack of selling pressure. All right, talking about breaking out. Look at Dell. I want to just point this one out. Dell. This one also popped up, touched that 21-day exponential. This is also one of the things when we look at our MA tools, you can see those stocks here that are touching that 8-day exponential. Today, Comcast was on that list. I don't know. I mean, this is not all of them are necessarily going to be good because you don't know that the longer term is good. But in the last couple of days, something like Dell, very interesting AI narrative emerging in this name. But again, if we want to be, looking for opportunities using that exponential, that EMA test indicator on our workspace here, this will find these opportunities. Now, if I look down my list, those are the only ones I think we have. Yeah. These are the only ones right now that are rising. I'm looking to see the others like Amgen is a falling 21-day EMA. I mean, it's kind of interesting. I don't know what's happening really with Amgen. They had a nice run here that we talked about at the time. And then they had something here where people suddenly started to think that their pipeline was not as good. I never fully understood, the viciousness of the sell-off that Amgen had. And I'm not enough of an expert in biotechnology, but it was a pretty significant sort of reversal there. Um, this is one I keep kind of watching and wondering if it's going to give us another opportunity. But so far, technically, it's not giving us much yet. And I think right now with earnings on April 25th, it still has time to chop, retest. Let's see if it makes a higher low around 270. Might go down and touch that 200-day moving average. So this might be one that, I'm not really sure what to make of it right here. But this is one that has worked in the past. But anyway, these are just some of the things. If you look at the 21-day exponential moving average test, that was how I discovered Dell yesterday. I put it on the rundown. But I mean, to me, Dell is an interesting sort of name. And these are some of the things that we're seeing here. And that's why we want to be looking at some of these signals on our TradeStation workspace. All right. Palantir also was giving similar signals recently. These are just kind of chopping down at the bottom of these ranges here. I'm not really sure what to think of Palantir. The thing I don't like about Palantir is it hasn't trended very well. It kind of like, I mean, it's up a lot in the last year, but the moves are very, I mean, this was a nice trend here, but then basically after that, it goes in these kind of longer term chopping. So, I mean, to see it get above this old high now, from my perspective, this might be another opportunity though, where maybe it could start to trend because now it has broken out above the old high. And what's interesting, it didn't even test the old high. And you see we're making higher weekly lows. So from my perspective here, Palantir is this is a stock that I have not done very well understanding it technically. However, when we look at it, it's making higher highs and higher lows. The 8-day is above the 21-day exponential. The 50-day moving average is above the 200-day. And so from my perspective here, this is something where it might not be particularly, easy to trade. However, it is still giving us those kind of signals that are pointing to the upside potentially. Um, Okay, now another one that was interesting to me that I did a trading view idea on was Autodesk. Now, this is a company that if we actually look, what was interesting here is there's a trend line falling across here, the 50-day moving average coming up. Now, there's a company that does like AutoCAD software. This is like, this is actually a pretty old software that a lot of people use, like engineers and designers and stuff. But they are now starting to bring AI on board. And this stock is interesting because, potentially this is a strong earnings report here. They raised guidance and it really like hasn't done very much. Now, I've seen this pattern before. And the pattern is, let's go ahead and put on our MACD on this chart real quick. MACD, come on. There we go. Now I've seen this. MACD was falling in a good earnings report. They smash it down. Then it holds, and then MACD turns green, and then it trends. I've seen it before. And I want to just kind of point that out, is that sometimes what you'll get is you get this sort of thing when, you have a strong news event at a time of falling MACD, and then a few weeks later, MACD is on your side. And I think that's interesting here. You have this falling, you have basically a trend line across here that it broke. I have an idea on TradingView. If you actually look, I'm not going to jump over there. I'm actually overtaxing my computer sometimes by having too many Chrome windows open. So right now I'm just going to use my trade station so I don't hurt my RAM. But anyway, it's funny, I've just opened up too many things, and some of these windows I look at, they have like ads on them and stuff. But there's a lot of articles I'm going to jump to in a couple of minutes. But anyway, the key thing is we basically have this trend line coming down across here. And then what's also interesting is look at this weekly low right here, and look at this. This was actually the high for all of calendar 2023. We came down to within a few cents of it, and we held there back on March 5th. So, resistance becomes support, holds a 50-day, has this trend line. And another thing here, if we would go and add Bollinger Bandwidth to this, Bollinger Bandwidth, you'd actually see that this stock has been at a very tight volatility squeeze here, way down here toward the bottom. Um, so again, it has not been moving. And that is interesting potentially because, I mean, if you look at this on the long term, um, it people might potentially see some space to the upside. I mean, it is a software company, and they're starting to integrate AI into a piece of software that is, if you're an industrial designer or something, this software is really the bread and butter of that industry. So, I mean, this is a pretty interesting. I mean, from my perspective here, this is a chart to kind of look at because sometimes you get these things they squeeze, and I've noticed that these kind of squeezing breakouts have given a higher probability of profits than trying to buy pullbacks like AMD. Name like AMD here, I've seen things like this just kind of, the short-term momentum here, the 50-day, I mean, the 8-day is just crossing under the 21-day. MACD is coming down hard. And basically, things like this can be frustrating. They can go lower for a while before they want to turn around and be your friend. And then some of these things like Autodesk, it's already paid its dues. And basically, at this point, we're starting to see the momentum turn positive on it. The 8-day crossed above the 21-day back here around March 11th. So that shorter term momentum is more positive. And we already see it. It tested the 50-day twice. So that intermediate term trend, it's had time to work with that and to hold it and to sustain it. And so, from my perspective, something like this, is potentially more interesting than something like AMD. AMD is just one of these names that when it gets weak, it tends to kind of really take a beating and struggle for longer than you think it's going to. Um, Also, all right, so the big news thing I'm going to jump to in a minute, but Apple. But I think Apple here. Um, I'm not even sure what to make of this. I mean, I was thinking about put credit spreads and something like Apple here, but honestly, something like this with the lower high, at this point, I think, that 170 level, it could be in jeopardy. So I think right now at Apple, this is something where it's just the beached whale, and now the vultures are circling. And The main thing is that there's so many other places right now where people might be looking for opportunities. So I'm not sure what to make of Apple here. Just a few others that were interesting to me was that Seagate and Taiwan Semi are also in this kind of camp here of you look at how it has the 8-day under the 21-day, but Seagate, STX, and Taiwan Semi, both of these are names that potentially we could see some chopping. And if it gets back down closer down its range, this could be something where selling some put credit spreads could potentially be an approach in a name like this. Right now, in my perspective, the upside being long upside in terms of spending money, paying a debit to be long names like Taiwan Semi or something like that. When you have this sort of short-term downtrend in it that it's just now trying to break, this could be something where waiting for a little bit more weakness and thinking of selling some credit to the downside could be something that has more of a risk reward in your favor. Um, but Dell, I think, was just fascinating to me. I want to mention that. We're also seeing what's interesting is these metals, and these just don't trade a lot of options. I wish they did. I was looking at commercial metals here, which is a steel maker, and look at this pattern we're seeing here with this trend line. Basically, this trend line breakout. Again, this is not that different from Autodesk. These tight squeezings with the breakouts, these have been the things that have paid off. Now, another company came up recently, and I don't really know anything about this company. It's called Carpenter Technology, but it's a steelmaker, CRS. Now, we've talked about these materials. I mean, I really think right now people are just now starting to wake up to the fact that materials are really, moving. And with the Fed I mean, at this point in time, even with the Fed now, we used to think it was 4 cuts. Now it's three, and who knows? It might be two in another 3 or 4 months, and the market just might not care. But the thing is, with that upgrade of GDP that they had in their dot plot, at this point in time, these cyclical things are an area where people are going to look in this kind of market. So it's interesting here to see CRS with this down, with this kind of pattern. There have been these patterns right now. I was looking at these steel makers now, like Nucor. I was trading this one a little bit. NUE, STLD. These names have been really jumping. Look, this one also had that same pattern. The this this kind of squeezing breakout. So this pattern is in a lot of things here, and this is kind of like there's just no sellers, and then before you know it, you're hitting new highs, and that's kind of what a bull market looks like. It's like you hate it, oh, I want a bigger pullback. Well, that's just tough luck for you. You're not getting it because everyone else wants the same thing. So anyway, these squeezing breakouts like we're seeing, and I think right now some of these materials. Now, some other material stocks. I mean, please don't throw tomatoes at me. I can't look at Eastman Chemical. We've been talking about this one, and I put it on my list last night. Look at this pattern. It's breaking the weekly resistance level that goes back to the beginning of 2023. And look at this. It, gets above, stays above, and then the people who want to own it just get FOMO, and there it goes. And so Eastman Chemical and LYB, Lyondell Basel, it's a chemical stock also. You have this weekly level here. Again, this is the 52. This was the previous 52-week high. It's just sitting and lurking. This is also the sort of pattern I think is interesting. These kind of squeezing breakouts are kind of just, they're popping up everywhere. And I think it just kind of shows the kind of market we're in right now. All right. So those are some of the patterns I want to talk about. Another name, I had it on my list last week, and I don't know much about this company, but this company, IDCC, that it claimed to have some kind of link to AI. This last earnings report was pretty explosive here, and it's been just extremely tight pulling back here. This is one I want to just put on people's radar. I don't know very much about this company. It's some kind of, I think, semiconductor name, but I want to put this on people's list because this is actually, I mean, if you look at this chart, I mean, look at this. You can basically see you kind of have this rounding bottom here above 100, which I just noticed that now. It's now basically basing out above $100, which it is a psychologically important number. You also have the 100-day moving average coming up to the bottom of the Keltner channel. I would also imagine, let's just bring up our Bollinger bandwidth again, because I think we're going to see here that this is probably now in an extremely tight spot. Bollinger bandwidth right here. I mean, we're seeing here probably a very tight sort of price action. So I mean, this is to me the sort of thing here that is another one that just kind of popped up on my list. This one popped up because of the Keltner pullback, and it was on my list last week. It hasn't done anything, but I think this is one here when we look at it. See, the 8-day is still under the 21-day. From my perspective, and this thing closes maybe at an 8 to 10-day high, or if it closes above the 50-day moving average, this could get back on people's radar. So this is one I think we want to just maybe be thinking about as a kind of 2 to 3 month kind of opportunity. If it gets above there, something of a swing. This is not a super like short-term trading name. However, this AI theme just continues to widen. So, I mean, think about Micron. Let's talk about Micron, because if you went back, 6 months ago, Micron was like, the buggy whip company, and they were the typewriter and the old-fashioned technology, and now it's the new AI name. Basically, it could gain more with its AI involvement. This is a note from Citi. There's just a lot of things in here that I mean, it's hard to even kind of follow all the things that were interesting about Micron. What I think was interesting, if you look at my rundown, I'm highlighting this, is it basically look at the key news section. Micron basically, their guidance was 5 times higher than estimates, and their revenue was 10% above estimates. So we have talked a lot about this, margin narrative, and this is exactly what we're talking about. The margins are, popping up everywhere, and I think the thing, and I want to say there's this double whammy right now. Margins are doing well, and one of the things is inventories have been tight. If you look at the ISM data, the manufacturing data for the last 12 to 18 months, we have seen very tight inventories. We have seen weakness, and that basically means that as the economy expands, people are going to place new orders, and new products that are coming into inventories, those get sold at their intended prices. You don't get the markdowns, and that means margin, margin, margin. So we're going to see pricing power by companies. It might be inflationary down the road, but the thing is that the companies are going to, profit from that. And then the other thing is, the economy not going into recession, the economy doing better than people thought. Companies are going to guide higher on the top line. So those two things together, higher top line and fatter margins on the, inside the down the income statement, those two things together could have a real boost for S&P earnings, and it's pay we're seeing it. I just have to emphasize that it is panning out. This is not just a hope. This is now becoming a reality we see with Micron. And we start with Target, look at Dick's, look at Williams Sonoma. This margin story is real, and you're going to hear about more probably about it going forward. Remember, if you don't know much about this, go to last week's rundown. We did this special sort of recap of the um, somewhere here, maybe it was the previous week. I basically highlighted the what I consider my 7 catalysts for stock movement. That was, things like margins, volume, and stuff like that. I think it was maybe this one back here on March 7th. 7 catalysts for stock movement. You guys might want to go back and check out this article, but we basically highlight this gives you a framework for concept for understanding how these different factors can apply at any moment in time. I call these narratives, or kind of catalysts, but these are essentially narratives that can drive a stock. Um, all right, so, but a lot of interesting stuff here with Micron. There was another thing here. Micron stock is about its 12-year, and so this new thing, high bandwidth memory products, which is part of AI. So there was a day when Micron was like, "Oh, that's some stupid old technology that's not AI. It's old. It's just commoditized memory." But guess what? When your margins are doing the way theirs are, that's not commoditization. So the market thought, "Oh, this is going to be commoditized. Margins die." Nope. So I think it's just interesting here to see this happening with Micron. So all right, Broadcom had some kind of AI thing happening. I'm not really up to date on this. This is an article here that was on Benzinga. I want to just point out that last week we had talked about AVGO, and we had kind of said, decent earnings report, but probably at this point in time, we're going to be, some chopping in terms of, after the earnings, selling credit spreads. That strategy would have worked out. But anyway, at this point here, because I don't see any opportunities in this either, this might actually chop back down some, but they have some kind of AI event that is on people's radar. Here's our Reddit starting trading. I got to zip through some of these stories. There's a lot of interesting stuff happening here. 5 analysts raise their forecast for Micron. I need to log back into Benzinga. Sorry. All right. So this is one from Fundstrat. Nvidia's uptrend, parabolic uptrend, is neither overvalued nor overbought. You know, again, it's like when you really look at it, that this is something where it is still modestly early in this cycle. I mean, I think you look at most business now, they're just starting to do stuff with AI. And, at this point, it's still something where the demand is just going to be kind of there for a while. And Nvidia is that kind of go-to name. I thought it was just kind of interesting to kind of see this. And I mean, we just have to remember that thing that happened with Micron. I mean, that is just huge when these companies are just pulling things out of, they're just suddenly coming up with these drivers. IBM did it, Oracle did it. This is not just a fantasy. This is panning out. Okay. Intel is going to do $100 billion spending spree on semiconductors. Now, this I think is also just something where stocks like Lam Research and stuff like that are also going to be here in an interesting spot. Bloomberg had a very interesting article several months ago where they basically said that the restrictions we were putting on semiconductors against China were actually bullish for stocks like Lamb Research and Applied Materials, AMAT, and stuff like that. Because basically now everyone's building chip factories, and that's positive for the capex companies, those semiconductor supplier names. And this is what really grabs my attention here. To me, I don't know what to make about Intel. The company has too many things going on right now. Some messy stuff that's been happening with their stock, and you know, but I think it's less about Intel itself and more about what this news represents. Okay. Super Micro did this equity offering. And I think it's just an interesting one to point out that, I think that this is a good example of why people don't want to be chasing necessarily in markets like this, where this is why letting things basically settle and kind of do these squeezing breakouts. That's why um, it makes sense to kind of do stuff like this. If we look at Super Micro here, you know, when you start to see this kind of pulling down the Keltner channel and stuff, even in a bull market, having that discipline to kind of recognize that, we're coming off top of the Keltner channel, the 8-day exponential is falling, bad news will, it seems to just come and happen. And so using some of these technicals to your favor. But I think it's just kind of interesting. Companies will do stuff like this is one of the things to be aware of when you have companies that have made a lot of that have really gone up a lot. You get these kinds of rude surprises, but then also it should give comfort if you miss the moves to realize they will pull back. Pullbacks happen. Have that discipline to actually let things come down the Keltner channel. Have that discipline to not be buying the debit spread when something doesn't have that favorable thing, and then look for those opportunities when things do crash and sell off to be thinking about maybe selling credit spreads or something like that instead of just necessarily chasing upside. I mean, a stock like this, I didn't actually look at the opportunity in the credit spreads, but this would have been that sort of thing. Right now, I looked before the webinar, and it didn't seem like anything was hugely favorable in this one because it was above the Keltner channel and could chop back down. But again, these are the sort of things that do pop up. I got to keep going here. All right, so Soc Gen, they raised their estimate from 4750 to 5500 on the S&P. They also talk about things like the elections are going to spur economic confidence and things like that. Reshoring. This to me is just a thing that just keeps going. Um, Interesting to me to also see AAII is actually showing people are getting less bullish, and that's actually a good sign. This is to me what I'm saying about the skittish market, where there's market rallies and people kind of sell it, they get scared. That is what it still looks like when you're in the first half of a bull market. There's a point where people they sell and then it keeps going and then they get mad and they have to chase. That is basically what I see here when you look at the psychology. It is not yet showing any kind of excessive confidence. We're not seeing this thing up at like 55% for several weeks in a row. This is the AAII sentiment survey, comes out every Thursday morning. This is interesting. A different thing here, the option skew is showing that people are not buying a lot of puts. Again, I'm not always sure. I've never really found the um, the put call ratio all that. It's not to me the hugest signal, but it is interesting. Some people do use it as an indicator. All right, so now Tom Lee, he's really pounding the table again on the small caps, and I'm looking off to my other monitor to see here because basically, to me, one of the big questions we now face is basically, is it time to look for the Russell to outperform the Nasdaq? I don't know. I'm really right now at a spot where I have been focused on this yield on the 10-year Treasury. That was the 10-year here, right here, this level. And I don't like the way we've gotten back to it so quickly. And I've been waiting forever for the small caps to like the IWM here to really outperform. And I'm just not sure right now because I do think we have to be careful of if that 10-year treasury yield kind of moves higher. So I'm undecided on this right now. I don't have much of a view, but I think this is an important question because there are a lot of people who are going to want to stampede into small caps if they have that sense. So I think we have to realize now that this is something that there's a lot of potential interest in, and a lot of people have had, like Charlie Brown and the football have had it yanked away from them many times, hoping and waiting, will this be the time? Will this be the time? But the thing is, if we get confirmation that it is the time, then I think it's something where it could be a significant move because this has been a highly anticipated move in small caps. Tom Lee there. So here's a note from KBW basically saying that banks are now more attractive because of what the Fed is, kind of confirming that they're going to be cutting interest rates. Hedge funds are buying banks. Interesting, according to Goldman. Goldman also said hedge funds are buying commercial real estate liabilities. I think they're buying the mortgages themselves, but banks, regional banks, commercial real estate, hedge funds are buying, this is again, these are the sort of things that you see when people are, looking for the worst, for the tide to have turned. So I think these are all potential opportunities. Chasing things too early in the cycle, can be trouble. But I think we are seeing now a series of potential opportunities lining up in front of us, and things like small caps, financials, like I was talking about Goldman Sachs. These things are now just opening up ahead of us, and I think it's important to realize that if we start to get more confirmation of that happening, then there is this risk of money moving away from the big tech into these names, into these areas. And speaking of that, we do have just the beach whale known as Apple and these sort of stocks that are just kind of, become a big source of funds, for people who want to be, moving to those kind of cyclical names. Um, so M&A also, according to this thing from S&P, um, Market Intelligence, excuse me, large M&A, defying regulatory. There's the lady at the, what do you call it, the FTC, the antitrust, and like, she's tried to stop deals, and the market just doesn't care. They're pushing forward. The first quarter is set to record the highest number of M&A announcements in nearly 2 years. So again, I think M&A has been absent as a catalyst in the market for a long time, and it can be a catalyst. It can be a huge catalyst, and that would also argue in favor of small caps. So it's interesting to see something like Reddit moving, something like Goldman Sachs moving, something like M&A happening, the bank stocks, and commercial real estate not being as bad as they were. So these forces are lining up ahead of us, and I think we need to be kind of watching for opportunities there. This is just an M&A deal. I'm not sure what this company called HashiCorp is, a software company. Paramount, another potential M&A. U.S. leading indicators. The first time it went positive in February for the first time since February, the first time in 4 years. That's interesting. Strength in weekly hours worked and manufacturing. I think we have to remember we have been in a recession for manufacturing for the last 18 months, according to ISM. And now all these things are potentially pointing in that direction of seeing that manufacturing pickup, which is one of those things about industrials that remains interesting. Home sales surged despite the highest prices. So I think something is happening now, and I think what we're seeing is I think we're finally starting to see the market is finally starting to thaw, for housing stocks. And I've had the view all along that as the market thaws, we're going to see rents come down. That is more of a theory, of a hypothesis than something that has yet been proven. But there's a lot of anecdotal evidence that, as people start to move and they list their houses, then they start to cut the prices and to get that deal done. And then before you know it, you start to see prices come down. You start to see activity in the market. Then you start to see people leaving apartments. And before you know it, rents are going down. And I think that's something, a dynamic that could kick in later in the year. It hasn't happened, but again, it's something that's kind of sitting out there. And sometimes when you see these potential things in the market, it just takes a little longer than you think to happen. And maybe it is starting to happen now. So I think this is a very interesting sort of thing, to see what's happening in the housing market. I think it's important to realize that the fundamentals in the housing market right now are very positive in terms of just the supply demand massively favors, builders and sellers, and that also means over time we're going to see more construction, and that adds to GDP. And then we have Apple. So basically, this Apple Google thing early in the week, that was the kind of silly news story on Monday. The market rallied. I'm sorry, this is not popping up, but basically, so we had this thing that Apple was going to be working with Google, and that was good, and then it was good for for Google and stuff like that, and then we turn around now, now the Department of Justice is going after Apple. But anyway, I think the key thing though is that this creates an interesting dynamic of a yin and a yang, where basically we can say that let's sell Apple and buy everything else, and then Apple weakness is good for the market, or we suddenly say, wow, Apple is too cheap. Let's buy Apple. And then that's good for the market. So I think this is actually one of these things where in a bull market like this, it's like heads I win, tails you lose. The news will break either way. And we just have to recognize we broke out to a new all-time high in January. We are in a confirmed secular bull market. And that means that things that should be bad can become good. And I think that that's an important thing to realize here. It's just the nature of knowing where we are in the cycle. So I did not have time to get to my special indicator. If you guys want to download it, I'll repeat it next week. This thing, you can then import it into your charts, and it will allow you to see like, oh, a stock, made its, it's been 50 candles since it made a move of 5% or something like that. And if you actually go into it, these are some explanations of the actual easy language code if you want to look into it. I don't have time to do it now, but it's great to be with everyone. Now I am going to be off next week, so I will see you guys the Thursday after Easter. Hope everyone has a great Easter, a great 4-day week next week, and we'll see you in 2 weeks. Thank you very much. Take care.